Good morning. It's Vijay here. Today is 15 January 2025. Welcome to yet another episode of pre-market commentary. I hope the bulls have got some respite yesterday after a terrible week beginning from 3rd of January. So today, I think we will continue the tug of war, and the tug of war is not going to end so easily because the bulls have got some respite and things are not looking that bad. So I think there may be some more fight left in the bulls. Of course, being in the bull camp, so I'm slightly biased that way. In fact, somebody mentioned to me in the comment section that I'm looking at past data, whereas current data is very bad. So all my reply to him was that in India, since 1991, when I've been following the markets and participating as a intermediary, we have never had a time when everything was good. There is always some or other problem lurking in the background. When the sentiment is bullish, people forget that. When sentiment is bearish, people look at the same problem and think that that will cause a problem in the markets. But markets have their own way, their own logic. We need to follow that. Whenever I have not followed that, I have suffered. So I would not like to just look at only negatives. I would also like to look at whether any positives are there which will take care of the negatives. If you look at what is happening in the market, the negatives are Nifty 50 is down by about close to 12%, mid cap is 12%, small cap 12.5%, 500 is 12.5%, and Nifty next 50 is 19. None of them have actually entered the technical definition of a bear market, which is 20% from the 52-week high, which has not happened. But people are feeling extraordinarily bearish. If you take sectoral indices also, the biggest fall has been in media, which nobody anyway looks at it. Energy, mainly led by Reliance at 25, media is 30, and the best performing or the least dirty sector is IT, which is down by about 6.5%. Actually, IT is, in my opinion, very overvalued. So it should have been really being there in the top 4 or 5. But you see, PSU banks are there, number 3 at 23, which means the top 5: Nifty Media, Energy, PSU Bank, PSC, and Realty. They're all in a bear market as far as the sectoral indices are concerned. So I've been a votary of PSU Bank simply on fundamentals, and fundamentals are only improving. They're meeting and beating the targets, but yet the market decided that they'll sell it off. So this is PSU banks. Look at Bank of India, good bank, good results, but 40% down from the high. Union Bank down close to 40%, Punjab and Sindh Bank 38. The banks which we hold, Punjab National Bank, which came out with a good status report, 31%. Then Canara Bank around 28%. Canara Bank management has said they will meet and beat the expectations this quarter. And State Bank of India is a laggard. It's still not entered the technical bear market. That's the only saving grace, 18%. So that's all bad news. So some sort of good news which will make the bulls, ready to fight today. Nifty snapped a 4-day losing streak, and then Adani Enterprises, Adani Ports led. Somebody said it is Pongal for Adani Group. I don't know why they went up 15%, 8%, 5%, but that is how Adani stocks are. Just day for yesterday, they were in trouble. So I don't really know what's happening there. Mid cap and small cap, all the indices moved up from their pathetic lows, which we saw on Monday. Pharma also, Realty also did the same thing. Only I think media did not do too well. IT declined, mainly led by HCL Tech, because I think the results which are good, as per they've met the expectations, but they were highly overbought position in HCL Tech, which made the stock fall significantly. About 8% it fell at one point of time. Nifty FMCG declined, mainly led by United Spirit, HUL, and ITC. Somehow ITC is not getting the traction. What we saw in India happened, the similar thing happened in US. US opened bright, then it fell down, then it bounced back at the close. That's what happened to Dow Jones. That's what happened to S&P. But Nasdaq closed in the red. So as far as the trouble spots are concerned, the 10-year treasury yield seems to have peaked out temporarily at least. Oil seems to have peaked out temporarily. So those two came down. And yesterday, the way the market moved, it is extremely nervous because today we'll get the consumer inflation report after our markets and before their markets. So that may be something which will dictate the short-term trend. Pessimism rules supreme among FIIs, 8,000 crore sellers. DIIs more or less matched it, but net the mood is very, very negative. What are we looking forward today? We are looking forward to a report which says that finance ministry is meeting the PSU banks. So something may come out of that, I suspect. US and UK have the CPI numbers. As far as earnings are concerned, HDFC Life is reporting. Apart from that, we have CEAT, Oracle, Bank of Maharashtra, Punjab and Sindh Bank. So these are the important events. So I would just like to share with you something about the markets. Yesterday, what happened to the markets intraday? I would just like to show you something very interesting. Yeah, where is that? I don't know. Yeah, this one. Okay, I think something is wrong with this. I'm not able to share, but I only want to tell you is that if you look at the US markets, which behaved exactly the same way, and yeah, here we are. So look at Nifty. Nifty, the breakers are the red line is the support and the green line is the resistance. Only people will become bullish only about 24,300 and they'll continue to be bearish and sell more if we go and hit the Monday's low. The same thing with Bank Nifty. Again, Monday's lows are the Lakshman Rekha, and what happened on June 3rd are the Lakshman Rekha for the bulls. If you take, as I mentioned, DXY, if you look at DXY, it seems to have topped out at 110. I think we will see somewhere close to 107 or 108. That is the next support levels. Oil also has been coming down after the top which happened day before yesterday. So now oil and the rupee dollar, one of my close friends, Mr. Mani, asked me to do a session on these two things which are the bugbears today in the market. I will do a special session on Saturday or Sunday this weekend where I'll explain actually that rupee fall is not something alarming. In fact, it is par for the course. And about oil, the Russia has been sanctioned, which is actually good news for India. So I'll explain in detail there. So that is as far as the sanctions as well as the strength or the weakness of the rupee is concerned. So today again, yesterday we had a good day as far as intraday trading was concerned. Today again, I will be cautiously bullish only, as I keep repeating. I will continue to be bullish till budget. After that, we will look at what's happening. So my Nifty futures and Bank Nifty futures on all declines. We would like to buy for day trading. So please note, I'm not a SEBI registered advisor. I'm not advising you to buy, but this is what I am doing and what people who follow me on Telegram may do. So whatever you do, I hope it is successful. Thank you for joining me.